You want to make a bit more bread? Don't want to work until you're dead. So come and listen ahead and find some other ways instead.
In this week's episode of the Financial Freeman podcast, we will explain why you should get a credit card, but why you must follow the golden rules when you get one. My name is Gary Freeman. I am a former corporate lawyer and now finance educator and finance mentor.
My name's Ronnie Freeman. I'm a property developer, artist and interior designer. And we will start with our news story of the week.
Which is that lenders are expecting a massive surge in unsecured lending. In English, basically.
Yeah.
That means that lenders expect that in the next few months, people will take out a lot more debt on loans, but also mainly on credit cards, which leads us beautifully onto the topic of credit cards. I think a lot of people, I've tried to find a stat, but I couldn't. I think a lot of people do actually have credit cards, although they may only have one and they may not really know why they've got it or the advantages of it. They just have it and that's what they do. But I know there is also a good percent of people who don't have it and who are just too scared about it. So it's those the people we're talking to, but also the people that don't really know how to use it and could probably maximize their benefits even more from it. So the reasons to get one, I think number one is probably the obvious one, and probably the reason why most people get one, which is sort of the access to credit. If you are going out and you're going to the supermarket or you are going to book that holiday, you've got a piece of plastic in your pocket, wallet, purse, whatever, phone, to pay for something there and then on the spot easily. And that is a great thing, you know. If you didn't have that, you'd only have sort of whatever your cash is in the bank account, and that might be that. So there's no doubt that is easy. The sort of the risk factors to that, and we'll come on to sort of risks, but is obvious that don't overdo that. You know, it's a powerful tool, that access to credit, but you've got to be able to pay for it back at some point. So that's the obvious one, but I think there's quite a few others that are possibly.
I think the obvious one is don't spend what you don't have.
Exactly.
That's the obvious.
Yeah. So that's the obvious advantage.
Yeah, not many people know the advantages.
No.
There's a credit.
Yeah, exactly. and the biggest one that I don't think anyone knows, and this comes from a friend who was sort of found out the hard way recently, is that you need to build up a good credit score for things like mortgages and other things like car loans and other types of finance as well. But a lot of people at some point will want a mortgage, whether that's buy to let or just on a residential mortgage. And if you've got no credit history, that is how the lenders, so the mortgage providers, determine whether to give you a mortgage or not. Now, it sounds a bit odd that you need to get a credit card to.
So if you've never had a credit card, they won't lend to you.
It's not as quite as binary, I think is the word, as that. But actually, they don't know how to trust you. So it's like you basically. I mean, I see a mortgage like as a marriage. You know, it's a long-term thing.
So romantic.
Yeah, well, I'm a romantic kind of guy, as you know. But yeah, they won't just.
Marriage is just like a mortgage.
Yeah, well, yeah. Not sure that's a good thing or not. But they won't just marry you straight away if they just don't know anything about you. So they want to be able to see that you've got a good track record, that that you're reliable, that you pay your bills on time, and that you can handle the credit, the big credit. Yeah, well, you want to know that I can handle situations or that I'm going to look after you. And so they want to know that I can look after the debt.
The mortgage people care about good sense of humour.
Yeah, that's top of thanks. The top of their list. They do want to know that you are that you. They like the fact that if you live in the same place and that but most that you're on the electoral roll. But they like the things that they really want to see is how you handle that credit in the past. And the obvious thing is getting a credit card and making sure that you pay off on time, and that you can prove to it. So you need to get that piece of plastic, even if you don't ever use it. Well, you probably should use it a bit just to prove to them that you're using it.
So what if you use 50 quid?
Yeah, 50 quid would be fine,
really?
because at the start you'll only get a small balance anyway. So kind of found out sort of the hard way in this because Ronnie just had access to my credit cards. So we only got Ronnie a credit card about 2 years ago because actually when we're starting to get the mortgages for buy to let, Ronnie didn't have a good credit score. And it wasn't bad, it just wasn't, it was fairly neutral.
I didn't have a good credit
Because you didn't have a credit card in your name,
Right,
you were
okay.
just on me. So they were like, okay, well he's all right, but who is this? Who is this person that you've got kind of
Who
who is
is
she in tow? I don't necessarily trust her. And I was like, no, it's fine, she's fine, I can vouch for her. But I think at least with a couple of the
So what?
lenders,
Me being married to you helped.
yeah, yeah. Well, in the end, we found another lender that didn't care necessarily about you. No
Right.
offense, but some of them did. They were worried about you, and you know,
Sometimes it worried about me.
and I was really surprised. I was like, well, what? So we have to take out more debt to be able to get more debt again, and that to me was just like it doesn't really make that much sense logically. Um, we didn't need that extra debt at the time. So it's a bit like, right, okay, fine, if that's what they want. But I get it a bit more now in that they just want to get to know you. So now that we took one out, I got to know her, and Ronnie's score has at the start it took a big dip because I got this is for the later half of the episode, but I will cover it now. It took a big dip because I got a bit carried away and we used all the balance straight away. It was a 0% purchases card, which basically means that you can spend as much as you like for the first 3 months, and it's all at 0% for the next 24 months. So I got a bit giddy on that, and it meant that credit rating is a lot of it's based on, or some of it is based on how much of your
Slow and
balance
steady.
that you use. So if we suddenly had access, it was only literally like £2,000, I think was the original limit.
So they don't like you, or they do like you to use it all?
They don't,
Right.
because then they think you need to use that credit, and if you're going too
No
far,
one likes a needy person.
no, exactly, too needy. So it's that person who's like constantly texting, like, "Are we going out
I love
tonight?
you, I
I love
miss
you, I love
you."
you, I miss you." And that's basically what I did at that when I first got access. I just
But
thought,
not to me. He was really hard to get. Actually.
yeah, really.
Too cool.
But they thought I was a bit too. That suddenly I needed to go out and spend the £2,000.
What did you spend it on?
Oh, whatever. Like I can't remember. Not like on flowers, but just on ready sort of on supermarket shops or whatever. But I thought it was better to use that than mine that I was paying off in full every month. But actually, it was, but not the full amount.
Oh yeah.
And so I should only have paid off, I should only use half that credit, because then they wouldn't have thought I was needy.
Oh yeah. Listen.
Yeah,
it's got T's and C's.
No, exactly, and that's why you need to know this stuff. It's really important. So I did get too giddy, and Roddy's score actually still went up, but than where it was, because at least they got to know her a bit, and so that she wasn't this complete stranger, but they thought she was a bit loose, a bit
stranger danger, but a bit needy.
a bit needy, a bit loose, a bit kind of willing to go to any of the shops and spend. So we reined that in. I think after a bit, I applied for another credit card. You have to wait a bit. That's another one of the golden rules that we'll come on to.
What's a bit?
I think I waited about sort of 3 to 6 months. Made sure I didn't apply for any.
Apply for ghosting.
Yeah, well, yeah, exactly. Made sure I didn't apply for like mortgages in that time, because I knew the lenders wouldn't like it, because too many applications in a short space of time is what they don't want.
Really needy.
Really, really needy. So made sure I didn't do that. Waited for 3 months, 6 months, between 3 and 6 months, until I knew that actually we were safe. Then I took out the new credit card, new 2K balance, but only spent a very small amount of that. So suddenly,
hard to get again.
You'd only used back down to sort of 50% of your overall balance, and they suddenly loved you again.
Is there like a golden number?
I think above 50%, certainly when you're just building your credit score, is a bit risky. So I think we got down to somewhere about 50 to 60%. They were comfortable with that, and your score then started to shoot up. But it was really important, all this, which is where we got onto this discussion, which was that the mortgages and lenders find it really important. So you've got to play by their rules and take out a card. So we've talked about line of credit, we've talked about lenders. The next thing is it does come with lots of rewards. So I was saying I got giddy with the 0% purchases. That is an obvious reward. They don't take any of your money. You don't have to pay any of that back for 2 years. And that can be really good, because you can spend for those 2 years, and your money might then come in after 2 years from your work or what have you. you could use that the money you would have been given to pay back your credit card, you can use that to invest. So that's something that we've done on a fairly bigger scale. Use the money we've got from credit cards to kind of invest, and that's one of the ways we managed to build up a pot. So that's the 0% that you get. So that's basically 0%.
What's the
means
highest
that,
0%?
well, I was going to say the highest 0%. I think you can get up to 30. I'm going to say 32 months now. I think it used to be 36.
No, highest money.
Well, the money you can only get all depends on your credit rating.
If you're like the
So
golden child.
so when I was the golden child, I think we got a credit card for somewhere about 13,000 credit
Oh,
limit.
you're not a golden child now.
No, I don't know exactly. Fairly still goldenish. But we took a card out fairly in the last 6 months, so less, basically just can't take out another one.
Oh.
But the score's still good. So the six sorry, so is it you can what was I saying?
Money, cards.
Yeah, so use the 0% and use that money wisely, and you can then, if you're really risk averse still, you could use, let's say you had a credit limit of 5,000, use that 5,000 and invest that 5,000 in a 2% savings account for the next 2 years, and you've made a bit of money. So that's what people do. There's other things though, apart from the 0%, is that you can get rewards. So lots of you have probably heard or use air miles. Now I think this is all a bit of a gimmick, because you do get free air miles, and that does allow you to travel, but only on certain times, certain dates with certain airlines, and you've still got to pay certain taxes. So actually you could probably book a cheaper flight still with Ryanair or EasyJet than you could, let's say, with British Airways going on that particular flight. So it's more for someone who probably travels lots. It's probably a good one for air miles, or uses the card lots. So if you're literally spending thousands on it, maybe a handy little tip. Maybe if you're working and you travel a lot with work, don't get necessarily a company credit card if it's offered to you, and use your own, because you could build up a lot of points that way. If you do get lots of points, then suddenly you could build up loads of air miles. And I have heard of people that use that as a trip to the States or what have you for not that much. So if you're going further afield, and obviously you can't use Ryanair, no one wants to stand up for 10 hours. And I think it'd be quite hey hardy so yeah, then it would be useful.
I don't want to wear a mask for 10 hours.
No,
I'd rather stand.
Yeah, that's true. Why not go? But the other thing is cashback. So the other sort of type of bonus card. So we talked 0% and the rewards, you can get cashback. So 1%, 2%, 3%, even up to 5% on American Express for the first 3 months on purchases, you can get 5% cashback. So again, a lovely incentive.
Why are they giving you that?
Right. Why do credit cards give you all these things? To basically draw you in, and a lot of the time it's so that they do make money on transactions, but they do also realize that a % of people will fail and will pay high interest rates. So with all of this, you've got to be shrewd and pay off at the right times. But they are seeing that people won't, and they start charging you, instead of 0%, 18% a year, and they make a lot of money from that.
So obviously they want you to pay your money back, but they don't really want you to pay your money back.
No, exactly.
So why don't they they should give credit cards out to the blacklist people, not the gold list
and some
people.
do, but I think some of them realise that they don't want to take on too much risk. So some of them have it, and they all have different rules, and you don't really know what those rules are. But they all have a different criteria. So I think some of them are willing to take more risks than others. And also they might give you one with your credit rating and not another one. So you might be more risky, but they might say, right, I want 10% risk portfolio on that, so I'll do that. But I actually want most of the people to pay off. The truth is, I don't really know, and no one really knows. Well, I'm sure people who work for them actually know a lot more. But all you need to know is that you do want a good credit score that's more likely to give you better access to more cards. And don't play the game too much, because your point is an absolute valid one. Is do you actually want to have a bad score? But the answer is actually no. I think they generally want you to be okay. But actually, if you do fail and eventually but keep paying them, that's their best case scenario. What the worst case is for them, I think, is if you don't pay anything back, and you're suddenly going bankrupt or what have you, then all that credit has gone. So that's the reason they don't want to take too much of a risk.
Right.
Um, I'm sure there's lots of interesting meetings that go on in these banks, what profile they want.
Interesting meeting.
Exactly. Now moving on to the next advantage, which is what we call Section 75 of the Consumer Credit Act 1974. Sounds interesting. It actually is.
We are great.
It's really good. No, it's very, very
conversations.
important. I'm sure actually lots of you already do know what this is, which is basically that if you spend something on your credit card from above £100, below £30,000, that doesn't work out. So, for example, the obvious thing is a flight, and you can't get them. It makes the credit card issuer.
What doesn't work out?
The flight, the purchase you made doesn't work out. It makes the credit card issuer jointly liable with the retailer. Now, let's say the retailer goes bust, then you could use your credit card. So you could write to your credit card company, call them up, say, I want to make a claim under Section 75 of the Consumer Credit Act.
And you asking for the full amount back?
Yeah, so always use your credit card in those kind of scenarios. We know people that have spent money on, because you asked me about it from a friend, that spent thousands basically buying furniture, and they used their debit card it was a dodgy online company, used a debit card, retailer went bust, or they couldn't track down the retailer, and they never got the furniture. And because it was a debit card, now there is something called not cashback, I've forgotten the word, but it's like cashback, chargeback, which you can sometimes use on debit cards, but the rules didn't apply here. So they couldn't use the app because it wasn't a credit card. That was the key. So unfortunately, there's nothing they could do, and they lost thousands. So it's really good to use your credit card in those scenarios, on the hope that the legislation kind of kicks in and you'll get the money back from the credit cards. Now, coronavirus might have changed some of all that. I'm not that familiar with the ins and outs, but that's the broad level of understanding, and that's all you need to know for now. The next one that I think I want to cover is just
There's more.
Well, there is, yeah. That's why credit cards are
How
so
many
good.
are there?
No, we're almost there. Is travel is the last one, which is that on certain travel, it can be very expensive to use either a debit or credit card. I think transaction fees up to about 3%. So that can really rack up, especially if you're spending an awful lot whilst you're traveling, be it with work or just on your personal travel. So, but there are certain credit cards that give you 0% transaction fees. So that again can save an awful lot of money. So if you are going traveling, check out, Google, travel cards. I think we've still got a Halifax X card, I think it is, which is 0% transaction fees. And certainly when I used to travel back in the day, that saved me a lot of money. So check out whether that still is applicable. We've not been abroad for a while, like the rest of you, I assume. But if it still is, then you'll save a lot on transaction fees. So that took us an awful long way to say why credit cards are really good, but I think we need to cover the rules of what you need to do. And I think we've touched on some of them, but the first one is don't apply directly, and use a soft eligibility calculator first. What this means, and lots of the actual banks have them on their own website, but also go on to things like Money Saving Experts, and there's probably loads of others, is you do a soft credit search. And it's exactly the same search to see whether you will be eligible for that card as the hard search. All it is, it doesn't leave a mark on your credit report. And what we're saying before, if you apply for too much credit, they think you're too needy. So all this means is that when it comes to the next decision, they won't look at your credit report and say, oh, hang on, he keeps doing this, he's going again and going again, he wants so much credit. It just doesn't, it gets a soft mark, which essentially just means like a little ghost that comes, but they can't see it. So use the soft eligibility calculator, and that will give you a list of results, tell you which one you're most likely to get. So it might say you're 100% likely to be approved as long as you're telling us the truth, basically. That's obviously the best one to get, but you might see one for 90% eligibility, which might have better rates. So you might gamble and say, right, I'm going to go for that 90% one, knowing that if you don't get it, it leaves a mark against you, but it might be much better rates than the 100% one, or rewards or whatever it is that you're looking for, in which case go for the 90%. I can't tell you what to do, but have a look at it and make a decision. Obviously, again, if you're risk averse, then and you're getting 0% for 18 months on 100% approved, or 0% for 24 months on say 90% approved, I'd be going for the 18 months, the 100% one, because I know I'm going to get that credit card, which is what obviously I want, and there's no chance they're going to say no to me. The next one that we did touch on before is that don't apply for other credit at the same time as just taking out a credit card, because that will leave the mark on your report. They won't like you. They'll think you're taking out too much credit. Don't do it. It's very, very important. So plan, if you're going to take out, if you're a landlord, for example, and you know you're going to be looking for a mortgage, don't take out a credit card a month beforehand. Think about it, plan accordingly. The next rule is be honest when you're applying. They can find out. So if you put how big your mortgage is, there is a system, because they want to know basically whether you can afford to repay the credit card. If you say it's only 500 when actually it's £1,000, then they may be able to find out that you're actually paying £1,000. That's credit card fraud. Don't go there. At the very least, you'll get blacklisted and not be allowed any further credit cards. So there's probably other things they probably can't.
Once you're blacklisted, is that for life?
I don't know the ins and outs, but I just don't. First of all, I don't think you should be applying anyway. But second of all, don't take the risk, because you might be blocked from future credit. It's certainly with things like your mortgage where they have got access to it. There's probably other, they've probably got access to everything. But
It sounds like terrible credit card fraud, but like.
Yeah, I'm sure some people do it.
I've suggested things and you're like, that would be credit
Yeah,
card fraud.
right. Yeah. Sometimes you might not even know about it. And so
Just thought I was being clever. Like,
just be truthful, fill in that application form, and go from there. The next few things is all about repaying. First of all, set up the direct debit. Don't ever miss a payment. Okay, that's the most obvious. If you miss a payment, that's a big cross on your credit report, and you might not be able to get access to credit from certain lenders for years as a result of that. They don't trust you. It's like you've cheated on them.
I mean,
that's
it's tough to get over.
That's the biggest no-no. So don't ever miss a payment, okay? But you've got a choice of how much you repay. Going back to where we were before with the 0%, you only want to repay a minimum amount. You want to keep as much of that money as you can, so only pay back a minimum amount. But if you've got a credit card whereby you are paying, let's say, 17% a month on it, you just got it because you just want it and you just want access to the credit line, then, or you're getting rewards from it, like a free air miles, then you need to pay that off in full every single month. That's very important, because otherwise you're paying interest of 17%. So work out what your actual card does and how much of it you should be repaying, and you can easily set up a direct debit. It's all online now, and make sure you do the appropriate direct debit. Okay.
There's a lot to say.
There's a lot to say, and there's a couple more things, and then we'll go. We've said before, don't use up all your credit balance all in one go. Okay. And pay for the right amount of things with your credit card. So again, work out what rewards you get. If you get 3 months where you get a certain amount of cash back and it's much higher, make sure you try and use those 3 months. Work out when you're going to be spending something massive, like a new kitchen, for example, and time it so that you get your credit card out just before you're about to pay that kitchen bill, not pay the kitchen bill after 5 months and miss out on that 5% cash back when it suddenly goes back down to 0.5%. So it's all about timing. And the final one is that's it. We've covered everything. So we've got that big episode, really important credit. If you got to the end, fantastic, well done.
25 seconds.
Any other comments, then please do drop us a line. We're around on Facebook, Financial Freeman, and LinkedIn, and gary.financialfreeman@gmail.com.
Oh, I need to sleep.
Thank you. Goodbye.